Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to do an update to the Las Vegas real estate market. It is February already.
Yay.
The market is absolutely on fire. It's been on fire for about 7 or 8 weeks. We're going to go through the data. First, I want to give a shout out to Rita, who put this look together. What was most incredible was Rita came in on a day off to get all this set up for me and everything.
I didn't say a word.
Of course, I'm joking because Rita doesn't have any days off. She works every day. Okay, let's start with this. Las Vegas. We're going to boom, real-time market profile. Over here, median list price, Juana, December 15th. It was $530,000 bucks.
Mm-hmm.
It's $553. It's up 23, almost 24,000 bucks. Median list price.
Right. So in about 7 weeks, that's
7 weeks. Yeah.
That's pretty good ROI.
Yeah. So that's a sign of a hot market. Stuff's getting bought up. Now, some of this, remember, these numbers are exaggerated just a little because of low inventory. We're going to show you this. We have the lowest inventory we've had in probably 2 years.
Right.
It's getting pretty low. Matter of fact, we may get down to 2021 or 2022 levels of inventory. If that happens, price is gonna blow up. All right. Okay. Median price of new listings is $509,950. Now remember the difference between median and new listings is because where do more homes sell, Juana? At the top half of the market or the bottom half of the market?
At the bottom.
The bottom. So remember, the homes at the top market tend to be on longer. So you have the homes at the bottom go off and on. So newer listings tend to be lower in price. Mm-hmm. So that's why there's this disparity where new listings. I've seen people try to say, oh, this means prices are going down. No, go look at our market updates from like 2021. We use these exact same charts. We've been using the same charts for probably a decade. And you'll see even in 2021, the new listings were less than the median list price, but home prices were going up. Mm-hmm. Okay, this does not mean that new listings are coming on less than what the previous one sold for. Okay, this one is substantially different though. December 29th, it was $450, and now it's $509. So it's up 60 grand.
In 5 weeks.
In 5 weeks, median price new listings. This is the real one. Why is this more important? Price per square foot. It was $258, it's $267. It's gone up every single week. It's about $9 a foot, which means if you owned a 2,000 square foot house in Vegas, from December 22nd to today, it's worth $18,000 more than it was.
That's crazy.
Yeah, that's crazy because we talk about this thing where people say, oh, I can't afford to rent. It's $400 more a month for that payment. But if I told you for $400 more a month in a couple months, you'd have 17, 18 grand, you'd probably do it, right?
Right.
Okay. Why is price per square foot more of a better indicator of price than these other two numbers?
Because that takes a better look at the market. Remember, if you're looking at the median and more homes come on the market in a certain price point, then that kind of skews the numbers a little bit. This takes a broader look at the market.
Yeah, and we could have more homes come on than the higher end of the market, and then it would look like prices are going up. But then if the price per square foot is going down, that's telling you that they're selling for less money, right? Right. And then you could have the median list price dropping because a bunch of homes on the bottom end of the market coming up, but if price per square foot's going up, that means home prices are probably going up. Mm-hmm. The other interesting thing on this, if you go down there where it says price decrease 33%, that means only 33% of the time people had to drop their list price. That actually surprised me quite a bit. It was only a third of the time. That means 2/3 of the time when they put their house on the market, it sells.
Well, it means that it was priced at market value. So people decrease the list price, not just because maybe the home isn't getting any activity. Well, it might be that the home isn't getting any activity because it's overpriced.
Here, if you look at inventory, on Friday, December 1st, we had 2,600 homes on the market. It's 2,100 homes on the market. It's 20%. Mm-hmm. It's 20% less than it was. in 2 months. And it was a low number to begin with.
Right.
So 2,134 homes, and then that's substantially lower. Now, to be honest, though, this happens every year at this time. The number of homes decreases because the homes are on the market a shorter period of time. So at any given time, you have less homes on the market, even though as we move forward every month, there'll be more homes sold every month.
Right.
Okay. Market Action Index, this is the 7-day average. This means every week they snapshot all the different numbers of a market and give it a thing. It's the highest it's been in 2 years, with the exception of last spring for just a hair in May. It peaked above this. But this looks like by May, we're going to be up where it was, if you look over to the middle of the chart there, 2021, 2022. A pretty hot market, right? I mean, that's when you look at this and just see the market and see what's actually happening in the market. Do you see that happen? Do you see this being a hotter year than last year?
Oh, absolutely. And I've said that for months.
Okay. Give an anecdotal information of what makes you believe that, like buyer demand, or what is it?
Just a whole lot of things. First of all, buyer demand, to your point.
Okay.
Buyers have been kind of sitting this out for a couple of years, and there's a lot of pent-up demand. Interest rates have moderated substantially, and that's also getting some people off the fence. There are more homes coming on the market, so there's more choice. That's getting people moving, all sorts of things. And then last but not least, it's just this idea of people just getting on with life.
Another thing, though, the Fed has been, because the economy's super hot right now, a ton of jobs are created. So the Fed said basically, hey, we're not going to drop interest rates in March. The federal funds rate, they're not going to drop that because the economy is still on fire. There's still a little bit of inflation, but the real thing is the jobs report were off the chart. Like, there's no recession on the horizon. Everything's kicking butt. And we're stuck with these high rates for a while. So do you think that if we end up staying the whole year in the mid sixes, where we are now, people sort of they anchor to that number and get used to it, and then they go out and say, I'm just going to buy a house, and if rates drop in a couple of years, I'll refinance?
Yeah, I think people are already there.
Do you think when people see what's going on here in Vegas with home prices going up, that they're going to say, oh, you know what, I'll wait till rates drop, but what if I wait 2 years and that $400,000 starter home that I can get is now, $100,000 more?
And that's a possibility. We're seeing that with these numbers just between December and February.
Investment property we bought 2 years ago, we couldn't touch it for probably $100,000, right?
Right.
And it's kind of disappointing because I'd like to buy 10 more of them, but yeah, that's just how it is. So, price per square foot, this is very telling. It's gone up every year on the same date. And you see that little hump. That hump is where interest rates started to go up, and it was the rush of buyers that were just trying to trap in a better rate, right?
Right.
Buying everything on the market, even if they had to bid it up.
Right.
Why would they do that? Why would you intentionally bid a house up $20,000, $30,000 over actual value? Because remember, that hump wasn't the actual value. That's just what they were paying.
Right.
Why were they doing that?
So they were trying to lock in those low rates, even though they had to come up with cash out of pocket on top of their down payment to meet the difference between purchase price and appraised value. Okay.
Here's an inventory chart. Inventory chart, as you can see, the last time we had this few amount of homes on the market, we have way less than we had this last year at this time. We have half, but it was 2022, which was a pretty hot market. That was right before interest rates shot up. So this will keep going down. If you look at the chart previous years, they pretty much were still coming down for like probably 2 months at this point. And then they picked up. And then there's usually the most homes on the market early October, right?
Yeah, we just haven't had that happen in a while.
I know. So the least number of houses we had on the market in Vegas were probably 1,300 in, I would call it, February, March of 2022. So that was 2 years ago. But if we, it's likely that where we had that increase of inventory, we weren't not going to see that in this fall. I don't see us getting back to whatever that peak was there. It looks like it was about 5,600 homes on the market.
Yeah, I mean, it would be nice because everyone would have more choice and there would be more movement. But I don't know that that's going to happen this year.
Do you think there's people sitting on the sideline strictly because, like, for example, we looked at a neighborhood, and I want to say it probably 500 houses
Hmm.
in a specific 3 or more bedrooms in a specific square foot range without putting any price. And I looked for a rental property and nothing came up. And I'm like, what? There was not 500 houses. There was nothing listed. This is in the like $400,000 range. These are, these are 1,600 square foot houses. And there's nothing available. Like nothing is for sale, even overpriced listings. Nothing was for sale.
Right. Yeah. I mean, I've been looking with investors for a few weeks now, and the only thing that we're finding is we're finding homes that have those like zero driveway things going on. So we don't want that. We've been finding homes that have these really tiny backyards to where you literally walk out the back door and it's the wall.
Yeah.
And then you've got another home right behind you. So obviously we don't want that. So that's what we've been finding. So, or we've had busy roads right behind us, like, I don't know, like Craig Road or some big road like that,
Okay.
right behind us. So it's been really very challenging to find anything at that price point that is actually going to make sense for them to rent out versus what they're going to get in rent. Because for about $400,000, you're going to get about $2,000 a month in rent, right?
Yeah.
Pretty close to that. So that's kind of what we're playing with, and it just doesn't make sense for them to spend the money on the house when the house has limited appeal for resale that way, and probably limited appeal for rental too, because nobody really wants to hear a busy road right behind them, or walk out the back door and walk into a wall.
Yeah.
So that's the challenge that I think a lot of us have had lately.
Okay. Yeah, great. Here's the next one, market segments. If you look at the bottom here, these 4 market segments, it's the top, second, third, and fourth quarter of the market split from top to bottom. What's most interesting here is 56 houses came on the market. The top quarter, 56 were sold. Not the same 56, just 56 houses, right? And then 73 came on the market in the second, and then 87. So more disappeared than came on. And then you go down to the next one, and 79 came on the market, 122 sold. And then the bottom, which is basically probably, I would call it like 420 and below. The middle of that's that 384 number. 97 houses came on the market, 135 houses sold. Mm-hmm. So 38 houses this is in a week, sold more than what came on the market. And you can see the days on the market are in line with that, right? Mm-hmm. Higher on the market for higher end. But even 84 days, that's not ridiculous for a multi-million-dollar house, because that's what we're talking about. We're talking about everything like 1.3 million.
Right. So, it's less than 3 months. That's very respectable.
How many of these, we know that Vegas, now nationally, 42% of all homes are owned free and clear. Vegas we're over 50. Mm-hmm. It's over 50%. How many just guessing, how many of these bottom 2 numbers, how many you think there's cash still out there buying? Do you think I know the top is cash. There's a lot of cash buying at the top.
Right.
Like it's mostly cash at the top. Mm-hmm. Say over 2 million, right?
Right.
And then what about this bottom, say under 500,000?
I think there's still quite a bit, probably about 30%.
Okay. Properties with price decreases. I thought this was interesting because of the trend. Mm-hmm. You could see that less people are having to decrease the price of their listing, mm-hmm. which is a leading indicator that the market's getting hot. And the trend is interesting because you could see every year at this point it was pretty much still going down, like mm-hmm. because you're getting in that really hot part of the year, which is March, April, May. That's when a lot of the purchase is going. I grabbed this one, price per square foot, because this is by those quarters of the market we talked about, mm-hmm. the top, upper, lower, and bottom. If you look at that blue line on top, that's only the top quarter of homes. That is by far the most volatile price swings. It's really affecting the market, making it so when people say, oh, remember when home prices absolutely crashed in Vegas or whatever? No, they really didn't. Most of that was just high-end homes, less of them coming on the market, or more lower price homes in that price range coming on the market.
some of the reason why why that top quarter is more volatile is because there are a lot of custom homes in that. So it's really difficult to price those homes. So what I mean by that is you're dealing with a home that is, usually in a high-end community like maybe a Skya or the Summit or the Ridges or Anthem Country Club or something like that. So you're dealing with that to begin with. Then you're dealing with the location of the home within the community. Does it have the strip view, the mountain view, is it on the golf course? What's going on with that? Then you're dealing with these being custom homes. So they have, I want to, for lack of a better term, limited appeal. Because these are custom homes that were built specifically for someone's taste and needs, and now someone else is trying to kind of fit into it. So they're not cookie cutter homes. These are homes that are very specific for specific tastes. So that's part of the reason why it's really difficult to price these. And you see a lot of that volatility, not necessarily because they don't have the value that they thought they did, but more because they're just very difficult to price because there are really no comparable homes to them.
If you look at the bottom three lines, they're very tight. And you can see that it looks like a pretty normal market with the exception of that little hump, which is interest rates, right? Interest rates just shot up from 3 to 6-7% over a pretty quick period. So it just it locked a lot of people out for a short period of time while they were trying to figure out what to do. We had somebody who used to come in on the channel and always talk about the Redfin numbers. Now remember, Redfin is remember they love to use median prices, which could be confusing because when the market slowed down, you had more homes at the bottom end of the market transacting. So even though home prices weren't like absolutely tanking, because the more homes were selling at a lower price, the median dropped substantially. So now what's happening is that's the opposite is happening, right? You have homes all through the thing selling. So if you look at, I went to Redfin to see what they think is happening with the market. Here's a little chart that shows price. It says here, in December 2023, Las Vegas home prices were up 11.1% compared to last year. That is definitely not a housing market crash, right, Juana?
Nope.
Selling for a median price of $422. On average, homes in Las Vegas sell after 48 days, with compared to 69 days last year. That's substantially hotter and pretty good information. There are 724 homes sold in December this year, up from 760. And then the other data that was on here that I don't know, it's not on the screen, but the average number of offers is 2. And they track that because the Redfin agents, they're only getting that from the Redfin agents because the Redfins have to put everything in a portal and then they can see how, on average, how many offers. So they're assuming that if their homes are getting 2 offers, the other ones are. Now, it's probably not right because their homes are probably not at the high-end homes.
That's what I was going to say is Redfin transactions don't cover the full spectrum of the market. So I think their numbers are skewed from that perspective because Redfin tends to transact in the bottom half of the market. Okay,
and then the other thing too, let's talk about this real quick. You're dealing with predominantly a million, so $1 million, $5, $10, $20 million homes.
Right.
How many of those houses are never in the MLS? And then so they don't show up in here because remember this, all these sites, what we get from Altos Research, what Redfin gets is all from the MLS. So how many of those, give me an example of one that didn't hit the MLS?
More than 20%, I would say.
Okay, and that's just like, if it's a 25 or 12 million or whatever dollar house, that's substantial data that's being left out of the market.
Right. And remember, these are people who value their privacy above all else. So that's the reason why they don't want their homes in the MLS.
The other thing this data does not take into account are new home purchases because they're purchased directly from a builder.
Right.
We know those things have been on fire too because basically builders are saying, oh, if you want a house, you have to wait. Like we have nothing standing inventory. You got to wait till.
They have interest lists.
Interest lists. And this includes super high-end homes, right?
Absolutely. So that's happening much more at the super high-end than anywhere else.
Okay.
Which is kind of crazy. But and I think it's because the super high-end homes tend to market much further in advance. And so I think that's part of that reason. While regular homes, they just kind of tend to go like a community at a time.
Yeah. We still have about 5,000 people, 5,000 to 6,000 people a month coming here. We added, I think, 5,000 total apartment units all of last year. So that did not accommodate the 60, 70,000 people that came. And then the new home builders built a equivalent number in the thousands, not more than 10,000 homes.
Right. But I think we're seeing a slowdown in the number of apartments going up in Vegas because money is expensive.
Yep.
And because a lot of new apartments have come online the last year or so. So I think they're kind of taking a step back and maybe looking at developing more units end of this year, beginning or middle of next year.
I talked to a guy that builds apartments for a living, and he basically said that interest rates are crushing them. They're absolutely like having to back off building because they're having to finance these in real time at adjustable rate. So they, a couple years ago, they could really crank these out and get them going, but now they're backing off. So if home builders are not building as many as they need to, and apartments aren't going up as fast as they need to, then this is going to affect, people are going to come into the resale market, right? Which is what we're seeing here.
Right.
Okay. What do you think this looks like if we don't get interest rates down so people are comfortable putting their house on the market? Do we turn into California? Remember, nobody wants to sell in California because they've got this ridiculously low tax rate that they pay. Was it Prop 21 or I forgot what it's called? Remember the thing where
I know what I
they
talking about, but I don't remember.
If you're from California, you can put it in the comments. But they don't, Prop 17, I forgot what it's called, but they don't have to put the tax rate is what they paid for the house. So if they bought 30 years ago and they're paying, $750 a month in rent or in tax, it's locked in. They don't, or the increases are limited or something like that.
Right. So, I don't know that we're going to turn to California, but I think that there's certainly going to be upward pressure on prices because of supply and demand. If we have limited housing and more people looking for housing than the housing that we have available, then sellers will be able to dictate prices, and same thing with landlords.
What's interesting about this Redfin chart is that, remember, this data only goes to December, and you can see it's already been ticking up. Once they factor in, like in 2 months, when we can see their chart having January and February, knowing what it's done, we're going to be above the peak. Record home prices in Vegas. It's going to happen this fall or this spring. We're going to hit record home prices again, probably in April or May. Yeah.
So that's what's going on in the Vegas market. Let us know what you think is happening in your neighborhood. Remember, real estate is hyper-local, so things might be different in on your block versus the next block, depending on what's going on in your neighborhood. And tell us what's happening in your market. If you're not in Vegas, we're always keen on finding out what's happening across the country. We appreciate your real estate related comments.
Oh, tell them about if they want to sell their house and stay as a renter.
If you want to sell your house and stay as a tenant, we do have investors who are interested in purchasing homes at market value. They're not going to give you a lowball offer. They're also not going to overpay for homes. So fair market value for the home, fair market value for the rent, and you get to stay in the house. Let us know. We'll be happy to see what we can do to put something together that makes sense for all parties. Remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.